Hey everybody, Boris, that's week at Forex. Welcome to the commodity dollar update for Aussie dollar, dollar CAD, Kiwi dollar for October 30th to November 3rd, 2017. The COM dollars kind of got their groove back at the end of the week. It was a very, very interesting Friday, big reversal Friday in COM dollars, and I think that reversal has more juice to go at the front of the week. So my sort of favorite starting trade as we start the week in Australia land and New Zealand land is actually long the Kiwi. I think that had the biggest turn. It came right into that support area that we talked about. There is not much on the economic calendar as far as COM dollar is concerned. We have a little bit of New Zealand data with employment. We have nothing really on the Australian side, and we do have employment in Canada at the end of the week. But it's really going to be a trade on sort of pro-dollar, anti-dollar flows, in my opinion. Usually, yes, they are definitely lower volatility bets on whether we get the pro-dollar, anti-dollar flows. And sort of to go deeper into that, it's really a bet on U.S. yields. Do we get to 2.5 on a 10-year on the U.S. side? That's going to crush the COM dollars. If we can't get up there, I think the COM dollars have a very, very strong chance of bouncing back. So here's how the resistance levels have moved. They've definitely moved down a little bit. We had, the range before was around 78.80. On the Aussie now 78.76. In the caddy, certainly blew it out. I think the biggest story of this week was the Bank of Canada basically squashing any thought of additional rate hikes, basically matching the Fed in December. They decided they're not going to do that. I think clearly they were concerned a little bit about the fact that exports have slowed down and the growth in the Canadian economy has slowed down so significantly. Inflation, all the central banks use the excuse of inflation as a way to basically maintain growth, and that's essentially what they did. And the Kiwi did bounce back a little bit after getting just shellacked by political news of the Labour win. Overall, the interesting thing to me, the reason why I really love Kiwi at this level is just because China is doing fine. And as long as China does fine, it really doesn't matter who's in charge of New Zealand. I don't anticipate Labour to be grossly reformative in a sense that it's going to be completely anti-market. And as long as that's not going to be a very, very big tax on transactions, the demand out of China is going to essentially maintain. I mean, Labour pretty much said that they're going to run the country with as little change as possible. That most of their policies are sort of policies around the edges and really have little to do with economic policies, more sort of with social policy. So to me, the political decline, the reason the decline in Kiwi because of the political change was perhaps overblown. As long, and this is a key thing, as long as China maintains pace. And that is quite interesting as we go into the week. So let's take a look at the chart. Let's take a look at the calendar first and see where the data sets are. I have a little bit of Chinese data here with manufacturing. That's really not going to be much. On the Canadian side, we have GDP data. That looks to be bearish, where we think weaker retail sales, trade balance really plays into the whole idea that Canada has slowed down significantly. Then we have the New Zealand employment data. We don't have Kathy does not have a clear call on this because the data has been mixed pre-release. And also remember that New Zealand employment data is wildly volatile because it's just a small data sample set that just a couple of thousand people could really flip it one way or the other. But generally, I think it'll be okay. And if New Zealand employment data is good, they should be supportive to what we're looking for to do. Next, a little bit of trade balance out of Australia. That's obviously going to be negative. Retail sales, that's a big look for us because retail sales has been a sore spot for Australian economy for quite a long time. And the fact that the market is looking for a big bounce now from negative 60 to plus 40 is kind of interesting. Again, a disappointment here could pressure Aussie. To me, the Aussie Kiwi trade is a trade to the downside as we try and if we're going to do any kind of inter-COM dollar trades this week. And then finally, we're actually relatively bullish CAD on the stronger employment data here. So this is sets up a kind of an interesting trade, I think, on Friday, because if the U.S. numbers are overhyped and Canadian numbers are underhyped, certainly presents a possible short dollar CAD trade into Friday, depending obviously how the releases go. Now let's take a look at the charts here, see how everything sets up on the COM dollar land, and we might as well just simply start with Canada because to me Canada is sort of very interesting. The Bank of Canada just broke out took out this whole big resist point over here. We definitely had a very, very strong breakout here on the Bank of Canada, Raymond, but today we just had a major reversal. The reversal obviously was caused in some ways for the weakness of the dollar and also the strength of oil. The one wild card in the CAD trade, where's my oil, is the fact, look at oil. Oil, we haven't been at 55 in like months. I mean, let's just take a look at oil prices. Look at this oil breakout. I mean, that is massive, right? If we were trading oil the way we trade currencies, we'd be buyers here because that's a strong impulse candle as possible. I mean, 55 is just written all over it as we go, which gives us sort of scope to believe that Canada could return right back, but return probably towards the 27, 26.50 zone. That's really where it's going to find more support. Overall, the trade has been positive dollar CAD for the last couple of months, and the fact that we are the fact that we did this reversal based upon stronger oil still does not necessitate any kind of monetary policy convergence, and that ultimately I think is going to take Canada back down. So I think dollar CAD is a sell in the near term, but into support and possibly a buy into those levels. We'll watch that very carefully. To me, the strongest obvious trade, and I've kind of marked this up already, so let me just remark it again because God knows you don't need to reinterpret my Google, my drawings here. Here's the reason why I really like New Zealand. So we don't have any further sort of negative shocks, right? Assuming employment kind of holds. China seems to be pretty good, and the growth in China is pretty stable. And we're coming into very, very nice, very clear double bottom support here at 68, right? And we bounced. The point is we actually held support and bounced, ended up at 68.73. So to me, I think certainly scope possibly towards 69, 69.50. Now 70 is going to be a very big challenge. And remember, this thing moves like 20 pips a day sometimes. It's the most tedious pair in the world. So for it to really, really ramp up would require some very, very negative movements on the US side. But assuming we're sort of quiet front of the week, I certainly think we have scope here to run to 69, maybe 69.50, just on a short covering basis after all of this vicious sell-off, but coming into some very, very strong technical support and generally a pretty robust fundamental picture. And then the last idea here, Aussie just definitely broke the the support here at the 77.50 level. So very ugly, lower high. Aussie just, what's the story in the Aussie? The story in the Aussie is the RBA is not talking about loosening monetary policy, not tightening it. I mean, we're going from the carry trade back into the QE land. Not quite, but look at this. A failure, triple top failure, lower high break of this thing. This really just sort of suggests whatever bounce we have here is kind of a dead cat bounce. And I like, if I'm going to make relative strength trades, I really like the Aussie Kiwi to the downside. I think Kiwi stays stronger than the Aussie, and we'll take a look at that next in the crosses section. Wish you guys the best luck, the best trading. Boris, over and out.